Sorry, and hello, my computer speaker just wouldn't let me do it. So I finally figured out where to find the phone number. So hello.
Hi. We're so happy to have you here.
We figured that you weren't hearing us because we were talking you up and you weren't responding.
Do it again. Start over.
Okay.
We were talking, John made the comment about Lakeview, you being with Lakeview and being one of our, a great partner. And we were like, it's all because of Vicky.
There you go.
Oh, shucks. Thank you.
Okay, y'all, I think we're going to be
part of all of it.
I think we're going to kick it off. Welcome to everybody on the call today. We're thankful that you're here. We're excited that you're here. We are excited to be partnering with John Hudson at Mortgage Financial Services to be able to offer our products to brokers like yourselves. So first I'll do some introductions. As we just were talking about Vicky Visconti, she's here with Lakeview. She is the working with the master servicer on these products. And then John Levesque, our homeownership director, my boss. And then myself, Sarah Eleanor, I'm the senior manager of homeownership programs. And then we have John Hudson in the office with us today. But
Yes.
We're all in separate offices.
Live from TSAHC headquarters in North Austin.
He made it just in time because we literally had our very first day back in the office yesterday. So today is day number 2. We're all kind of, what do I want to say, brushing the dust off our offices and things like that.
It still has that new car smell. It's amazing.
Yeah, we did. We built a new building and we got it done. I want to say, when was it? December of 2020.
Yeah.
And so it's kind of just sat here for a minute. Like there were probably a handful of people coming in and out every day working here, but the rest of us were pretty much at home for a while. So it's nice to be in these new offices. It's really pretty. So, okay, well, we're gonna kick it off. So again, I'm Sarah Eleanor. I have been with TSAHC for almost 10 years. It'll be 10 years in December, which is kind of crazy to think about. But I've been in affordable housing since I started my career, started off at Habitat for Humanity, and then I was a housing counselor. We moved, I'm from Iowa, my husband's from Austin. We ended up in Austin because I was too darn cold for him. And so we made it back to the motherland, as he says all the time. I've got 2 kiddos, a 6-year-old little boy whose name is actually Hudson. I was just sharing that with John. And then a 3-year-old little girl, Eve. And so they keep me on my toes. But enough about me. I just wanted to give a brief introduction. But basically, we are here today to share all the benefits of TSAHC that will hopefully benefit you and your business. And so we're going to go through a high-level overview of what we have to offer you and how it can help your clients. And then we will also hand over the reins at the end to John so that he can talk to you all about the process that you'll encounter when trying to use TSAHC's products with Mortgage Financial Services. So as we go along, as John always says, if you have questions, feel free to unmute yourself and ask me, but try to keep the question to the slide at hand, because generally I will probably answer your question on the next slide if you have a question about something that's not being talked about right now. So let's go ahead and get started. What we're going to talk about today is just a little bit about TSAHC. Maybe some of you haven't heard of us before. We'll talk to you about how we started and who we are and what we do. Then we'll talk about the down payment assistance and the mortgage credit certificate programs, which is, what we want to focus our time on today and get you excited about them. Right, John? You wanted to say something?
Yes. Well, I mean, talking about getting excited about these programs, I think it's important for every originator that's on this call, and then even your colleagues that aren't here to join you today, need to be aware of these programs and need to be out there having conversations with people about them. There's a whopping 78% of consumers, of home buyers, will actually go and get their loan with the first originator that they actually make a connection with. Not a phone call, but an actual connection. And you really, especially in today's environment where there's very little inventory, home prices are going up, mortgage rates are going up, it's challenging out there. But at the end of the day, consumers still have a need. They still want to own a home. Home ownership is still the key to wealth creation in this country. And you know what? The interest rate they're paying on that apartment that they're renting is 100%. So you need to utilize these programs in part of your marketing arsenal. So that way, when you're out there and you're talking to consumers, you're taking on the role, not just as loan originator, but also as, you know what, mortgage advisor, mortgage counselor. You're there to help solve problems and help put people in homes. And the Texas State Affordable Housing Corporation programs, be it whether it's with the MCC or with their down payment assistance or both, are excellent tools that, you know what, is going to help you not just put more families into homes, but also you originate more loans, generate more referral partners, and just be more successful as a loan officer in general. So that's part of your why are you here today, and that's to learn these. And we want to hold your hand throughout the process. So, and we're blessed to work with Sarah and Janelle and Frank and the rest of the team here at TSAHC. And yeah, and then Vicki is our servicing partner. So I'll kick it back over to you.
And Frank, I didn't see, are you on here? Is Frank on here?
I haven't seen him yet.
I don't know.
Okay,
You're gonna go
he
grab him. His office is
No,
right
no,
outside.
no. He had a training this morning, but I just wanted to introduce him if he was on here. I didn't see him, so that's why I didn't say his name. But yeah, Frank's an integral part of our team as well. I'm sure you guys will be talking with him if you give us a call. He's the one that answers the majority of our phone calls. So anyway, let's get started. John's our hype man, so I wanted to give him a little of that because he's better at that than me. So anyway, let's talk about, we're also going to talk about a little bit of program fees. John will probably also touch on, you know, your compensation with them when using our program, and any other kind of fees that they might have, how somebody qualifies, and then some great marketing ideas and resources that we've gathered along the way, and we want to share with you today. So who is TSAHC? We were created by, and why we say TSAHC, I don't know, because the T, S, and A, and H, and C are not in that right order, but just know that if you say TSAHC, you'll be an expert, because we always know people know us if they say TSAHC and not TSAHC. So don't say TSAHC. So we were created by the Texas legislature, and we're kind of considered the state's nonprofit organization. We were created to serve the housing needs in various different ways of underserved populations. So we came up with this concept to tell folks what we do. We help developers build and rehabilitate both multifamily and single family affordable housing all throughout the state. We have different funding mechanisms by which we do that. And then we have our buy component, which is what we're here to talk about today, the down payment assistance and the mortgage credit certificates. And then we have our stay component, where we actually bring in training for housing counselors that are providing homebuyer education, financial education, credit counseling, things like that. And we bring that training to them at almost a 90% reduction in cost. So we feel it's important for them to keep up their skills, and knowing that most of them work for nonprofits as well, it's our idea of sustaining their, building their capacity as organizations and bringing that knowledge back to their communities. We also require homebuyer education of anyone that's going to take our or use our down payment assistance or mortgage credit certificate program, because we want people to stay in their homes. We want them to be successful. So those are the three different ways that we work as an organization. The great part about it is that we do not take any kind of taxpayer dollars for these efforts. So we are a true self-sustaining 501c3 nonprofit. And I just think it's amazing the amount of great work that we do in the state of Texas without any kind of taxpayer dollars. So our buy component, what do we have? We have two umbrellas under which people fall to use our assistance options: the Homes for Texas Heroes program and the Home Sweet Texas Home Loan program. Between the two programs, we serve everybody in the state of Texas that meets our income limits anywhere in Texas. So these programs are available statewide, and they're available to anyone. It just depends on their profession as to which category they fall under. The Homes for Texas Heroes program does give you guys a great target audience to focus on, right? It gives you instead of marketing yourself to the masses, you're focusing on teachers, or you're focusing on firefighters, or you're focusing on police officers or veterans. And most people tend to know someone in one of those professions that could potentially help them with an in, if you will, to market yourself and these products. So that's what we kind of say is the benefits are the same that someone would receive, more or less, depending, regardless of the program they fall under. But the Texas Heroes program gives you that target audience. So what do we offer? We offer down payment assistance, and we offer mortgage credit certificates, which are essentially mortgage interest tax credits that someone is able to take every year they live in the home. How does our down payment assistance work? We offer 3%, 4%, or 5% assistance options. The assistance is based on the total loan amount. So for example, if you were to choose our 5% option and you had a loan amount of $100,000, we would essentially be giving you $5,000. And that could be put toward closing costs, down payment, or even principal reduction. You don't have to be a first-time home buyer to use our down payment assistance by itself. So that can be a confusing, there are programs out there that are first-time home buyer programs. Our down payment assistance, you don't have to be. They can even currently own a home as long as they're planning to buy their primary residence with our program. Like I said, there's flexibility with our funds. So they can use it toward down payment, they can use it toward closing, a combination of the two, or even if you're working with someone using a USDA or a VA loan, where our money is more than covering the down payment, and then the seller covers the closing costs, then you can use it for principal reduction. The interest rate that is associated with the first lien mortgage is going to be set by TSAHC. So we set the interest rate on the mortgage loan depending on the amount of assistance they choose. If they choose our 3% option, then they would be getting the lowest interest rate we have to offer. If they choose our 5% option, they would be getting the highest interest rate that we have to offer. But it is a fixed interest rate mortgage loan. I will address, as John keeps referring to it, the elephant in the room, in that the market has kind of went a little crazy on us in the last week and a half or so. And so we had to drop a couple of our options, the 4% and the 5% option, and some of our grant options. We're hoping that, investors gain an appetite again soon for those types of products so that we can bring them back, but please don't think that they're gone for good. Be patient with us. We want your trust. These programs have been around for a long time, and this is the first time in my 10 years that we've had something like this happen so drastically. So before, it's just, I think it happened once in 2017. We had to drop our 5% options, but it didn't last very long, and we were able to bring it right back. So I just don't want you to get y'all to lose trust in our programs. Know that we will be there for you. Just help, be patient and ride this out with us. We're at the mercy of the market.
Hey, Sarah, can I jump in just super fast?
Yeah, please.
Okay, great. Because I actually learned something new too today, and this is actually pretty cool. So, a lot of folks, you myself included, used to just assume that these were actual bond loans, right? That meant that that y'all run out of money, but that's not the case, right? Janelle, can you jump in and chime in on that?
Yeah, so we were fortunate enough, 2012, we actually started dealing with mortgage-backed securities. I mean, essentially, as I told John earlier, we're like a mortgage company, a nonprofit mortgage company. So we sell mortgage-backed securities just like you do, and that has enabled us to have a perpetual fund. We always have funding because it's mortgage-backed securities. The problem is that when rates are volatile quickly, like they are now, or like they have been, Sarah said something about a week and a half, and actually this has been going on for a couple months. We were, between ourselves and our investor, Lakeview Loan Servicing, we were subsidizing those rates for quite a while, and it just got to the point where we couldn't do that anymore. But this is something, as Sarah mentioned, happens very seldom. But when rates drastically increase like they have, then what happens is investors lose their appetite for those higher coupon mortgage-backed securities. And so that's kind of in the position that we're at now. But once things kind of settle out a little bit, they'll come back on board. So yeah, good news. We don't run out of funds, but we could potentially run out of various levels of DPA, and it has only happened twice in the last 10 years.
Yeah.
Right.
So, but it will be back. I mean, the 4 and the 5%,
Yes,
that's part of y'all's core
absolutely.
mission, right? So that's going to
Absolutely.
be there. Yes. Awesome.
And we
Okay.
do occasionally offer a bond program, and that's the reason why we specify non-bond versus bond throughout our guidelines and our interest rates, because if it is a bond program, then you are restricted to first-time home buyer requirements and various other requirements.
And we may be rolling one out soon because we need to increase our product option and product suite, but stay tuned. We always send out announcements, and I'll be sure to add you all to our distribution list so you get those announcements. Okay. So 2 different ways that you can offer down payment assistance to someone. One is a grant, basically a gift, right? That's not needing to be repaid. We do have them sign a program affidavit that says they won't sell or refinance within 6 months of buying that home. If they do within 6 months, then they would have to pay back the money. But after 6 months, it's a gift, no strings attached. But there's no second lien attached to that grant. It's offered on the government loan products, so FHA, USDA, or VA, and the 3, 4, and 5% options. The second lien, the 3-year deferred forgivable second lien. It's a mouthful, but we wanted to name it that way because it tells you exactly what it is. It's there for 3 years. The payments are deferred. They're forgiven after 3 years. There's no interest accruing on that lien. And basically at the 3rd anniversary of the closing date, it gets fully forgiven. The benefit of using something like this versus the grant is that it will offer typically a lower interest rate on the first lien mortgage loan than the grant options. So that is why someone would maybe choose this option versus the grant. And it does have the ability to be combined with our conventional products as well, the HFA Preferred or HFA Advantage, which are the Fannie and Freddie conventional loan options that we offer. And just a quick FYI on that conventional loan, the conventional allows you to give the borrower a 3% minimum down payment versus a 5%, which is a traditional conventional down payment requirement. So it does offer you a little bit more benefit than a traditional conventional would. So we have a loan comparison calculator, and I don't know, John, if you and your team use this a lot, but it is something that I think is helpful, especially for those that are new to the programs, because we have a lot of options, and sometimes it's hard to sit down and do all the math for all those different options to lay it out for your borrower, so they can make a decision for themselves what's best for them. So we created this loan comparison calculator to allow you to compare up to 3 products of ours. So you could do comparison with an FHA to a conventional, to a 3%, to a 4%, to a 5% down payment assistance. And it's going to show you basically, the different interest rates. It's going to show you how much down payment is required for that particular product. It's going to show you how much we provide at TSAHC, and then how much additional down payment they might need, or if this number happens to be in green, how much money they have left over. Like, we're more than covering the down payment, and then they have money left over to put toward closing or a principal reduction, like I mentioned. It will also show you differences in mortgage insurance. And these are estimates, obviously, that we get from the various mortgage insurance companies. And then we also show, oops, I'm so sorry. We also show the difference in monthly payment. So this is just principal and interest. We don't include taxes and insurance in this particular calculation, but it would show them how their interest affects their payment. And so therefore they can decide, do I want the 3%? Do I want the 4%? Do I want the 5%? And they can lay it all out and decide what's best for them in their particular situation. Okay, so I like to always see, I don't see a lot of people on camera, but you can unmute yourself and say, hey, I've never heard of the MCC, or how many people have heard of the MCC program?
I have. No, I'm just kidding.
See 2 hands. Okay.
Yes.
Okay. Well, that's I would say 3 more than I normally see in my trainings. So good on y'all. But the mortgage credit certificate program is a really, really beneficial tool for you. Basically, it is a first-time homebuyer program. And this is where I'll engage the audience another time. Who can tell me the definition of a first-time homebuyer? John, you don't get to answer.
I was gonna say, would that be cheating if I raised my hand?
Someone who hasn't bought a
Anyone
home
that
in
had
3
a
years.
home in the last 3 years.
Close.
Okay, so I heard the 3 years. I heard someone who has not bought a home in the last 3 years. I'm going to add a
Hasn't
qualifying.
owned one.
And doesn't own one too.
I'm going to add a qualifying word into those definitions. It's anyone who has not had ownership interest in a primary residence in the last 3 years. So no ownership interest in a primary residence in the last 3 years would be considered a first-time home buyer. So there might be people out there that bought a home 3 years ago, but they immediately rented it out and they've been renting ever since. Or maybe they were deeded a property by a mother or a grandmother or a grandfather, but they never lived in it as their primary residence. Then they would still be considered a first-time home buyer. And again, this first-time buyer requirement is waived for qualified veterans. So if you're working with a veteran, then you don't have to worry about the first-time home buyer requirement. And it's only attached to the MCC. So again, down payment assistance, you do not have to be a first-time home buyer. So what does an MCC do?
Oh, no,
What's that?
hey, Jen, I'm gonna stop you right there. And there's actually a great question that just popped up. What does that
Oh,
matter
okay.
in a divorce, in an instance of a divorce?
So in Texas, because Texas is a community property state, if that spouse lived in the property, they had ownership interest in the property, even if they were not on the mortgage, if that makes sense. So if they got divorced, but they lived in that home in the last 3 years, then they still had ownership interest in it.
And
But no,
that's why
that
the
may-
3 years tax, one of the reasons why the 3 years tax returns are required. And we're going to see married couple claiming mortgage interest for 3 years, whether that person had.
See, no, but that's awesome. So I've been doing this for 24 years and I just learned 2 new things. So I didn't know that a veteran could get their first time buyer requirement waived for that. That's huge. And then also that, in the instance that they had a property deeded to them or it was rented out and they haven't been living in a primary. Those are 2 big things that I hope every originator on here just kind of locks into their brain, because that could be the difference in knowing how to structure a loan versus the other loan officer you're competing with down the street. Sorry, keep going.
There you go.
Right.
Thank you, John.
Uh,
Okay, so
quick
what is
question.
an, I'm sorry, Brent?
That's not computing to me. So if they own a property and it's not their principal residence, they still own that interest, even if they've been renting it out. So
But
you
it's an
say they could
investment
own
property.
a few properties and just put them up as an investment property, never have a principal residence, and we can still consider them a first-time home buyer?
Correct.
Wow. Okay. I'm trying to wrap that around my head after 20 years. That just doesn't seem right, but okay.
That's
Thank you.
the IRS definition. So, okay, I'm going to jump into the details, the nitty gritty of an MCC, how it works, how it's going to benefit you in structuring your deals. So what it allows you to do is to take 20% of the annual mortgage interest that a buyer spends on that mortgage and get that back through this credit. So it helps them get 20% of the interest they spend on their mortgage every year back. They do have to occupy the home as their primary residence in order to be able to take this credit every year. But the best thing that you all need to know is that it can do 2 things for you when you're structuring your deal. The tax credit that they're able to take, when you calculate that, you can add that to their income, which can not only increase their buying power, but it can also reduce their debt to income ratio. And maybe that's the difference of them qualifying or not. So those are two things: increase buying power and reduce their DTI. It's a big, big win-win-win for everybody involved, the lender, the realtor, and the home buyer. If you're working with one of those Texas heroes, we do offer them a special benefit. So we offer the MCC to them for free if they're using our down payment assistance as well. And that's a $500 savings. There is a $500 issuance fee attached to the MCC that gets waived if the hero is working with the DPA as well. Okay, so how does it work? 20% of the mortgage interest, we're going to give you an example. And it's funny because even like 3 months ago, this 5.75 rate seemed high. And now it's like, oh, this is on par. So the loan amount of 200,000, interest rate of 5.75, the interest they'd pay in that first full year in the home is 11,500. What's 20% of that? $2,300. So that's $2,300 that they're able to get back of the interest that they're paying on their mortgage. That $2,300 is what you can add to their income to help them qualify for more if that's necessary, or to help them, sorry, I don't know why these are going on their own, or help them lower their debt to income ratio if that's an issue for getting an approval eligible through your automated underwriting. So we came up with this example to show folks what an MCC or how it impacts someone in their specific scenario. So we always get the question, well, my borrower gets a refund every year, so I don't need the MCC. I wouldn't benefit from it. And that's just not true. So I'm going to show you why. We are going to use this example. I'm going to say this is Danielle's bucket. Danielle has an empty bucket, an empty tax bucket. And her tax liability every year is $10,000. So what she does is she sets up her payroll income tax withholding with her employer on her W-4 accordingly, so that she's hoping enough gets set aside by her employer and put into the bucket throughout the year that when she files her income tax return, she won't have to pay more. She will have covered her tax liability or what she owes in taxes throughout the year through her withholding on her paycheck every time she got paid. In this particular example, she has overfilled her bucket. She's more than covered her tax liability. And the money that falls out of the bucket is her refund. That's her own money coming back to her that she has set aside throughout the year to cover her liability. So she's more than covered it. Some of it fell out. She's getting that back as a refund. How does an MCC affect the same scenario? So this year, Danielle bought her first house. She got the MCC. She's going to start the year off with a fuller tax bucket than she did the year before, because Mr. MCC man is going to go into the bucket first and reduce her tax liability to $7,700. So she's starting the year off with a fuller bucket. She's going to keep everything the same with her employer. So same amounts getting put aside every time she gets paid. What's going to happen to her refund this year? It is going to increase by exactly $2,300 in this situation. So just because your borrower gets a refund doesn't mean they won't benefit from the MCC. It is a huge win-win-win for everybody. Effectively, if you think about it, reducing their interest rate, right? Because they're getting some of that interest back. It's not reducing their interest rate like on the mortgage loan, but they are getting some of that interest back. So effectively, it is reducing their interest
Well,
rate.
Sarah, I'm going to put my sales hat on for a second. You talk about generating leads, right? In today's competitive environment, what's not a great way or an easy way to create a conversation by saying, hey, first-time buyers, ask me how I can get you a bigger tax refund every year. I mean, that's like a no-brainer to me, right? And then more so getting your realtors to even do the same on your behalf. So use that to generate more leads out there.
Yeah, and show people what their effective interest rate is. I mean, they're getting their interest rate is the same regardless, but if they're getting some of that interest back, you can say, I know rates are getting higher, but I've got this great program that's going to help you get some of that interest back.
Yep.
So, calm yourselves a little bit. I can help with this. So I think it is a big tool, a big sales tool. So we did come up with a few things that we feel like give people a good idea of how to use these programs to your benefit. We did do a podcast. In fact, Jonielle was the host of this recent podcast about how to win the bid in a competitive market. And so we took some of that information from that podcast and put it in our training today, because I do think it is beneficial for you to think about. So number one, if you're using a down payment program, it can help you beef up your down payment to the point where your offer might be more competitive with another offer because you're putting more down. And sometimes that can be more attractive when when a seller is looking at two otherwise equal offers. The seller is probably more likely to go with one that has a little bit more higher down payment commitment. So the down payment program can help them do that. Even if they have their own funds, they can use our program to help beef it up. The next thing is it can free up the buyer's savings to help with other things. Like maybe they need to buy furniture when they move in, or maybe they need to pay off some debt. Maybe they have a credit card that's holding them back, or maybe they have a car loan that they need to use their savings for to pay down. So that frees up their monthly debt to income ratio, or monthly payment allotment. And then also, people tend to fear in today's competitive market that if they disclose that they're using a down payment assistance program, the seller is going to run away. And with our program, you don't have to disclose that they're using a down payment assistance program. You don't have to disclose that they're using TSAHC. I just talked to a lender the other day. They're like, oh no, I don't put anything on there about TSAHC. I don't have to. And so I'm winning bids because people are using this program to help them with their down payment. And then also, like we've mentioned multiple times, the down payment assistance by itself is available to repeat buyers. So if you're working with someone that's wanting to upgrade or downgrade, whatever it might be, they can still use our program as long as they're using it to buy their primary. The next thing is, how does it help you increase the buying power? So basically, using a down payment assistance program does allow for people to pay off their debt, which I think I already mentioned on the previous slide, which would lower their debt to income ratio and help them qualify for more potentially, or just qualify at all. And then our down payment assistance funds can help free up the buyer's funds to potentially pay over asking or over appraised value. So you cannot use our down payment assistance to cover the appraisal gap. But if you use our program, then that frees up their own funds to cover the appraisal gap. And we're seeing that a lot right now, obviously in Texas. I talked to somebody yesterday that said their client bid over a house $75,000 over asking in order to win the bid. And I was just like, what? That's crazy. I don't think that our down payment assistance would help with that much, but if you think about it a little bit.
In a very hypothetical sense, maybe it could, but I just want to touch on just one more sales point. And again, as an originator out there, there's a lot of loans to be had, again, because your competition didn't know that borrower could get MCC. And if you add a couple $100 a month in qualifying income, and that takes that loan from a refer to an accept, well, now in that real estate circle, you're a genius because you're the wizard. You managed to bring a loan back from the dead and help put a family into a house. So make sure that make yourself the expert on that. And again, that is another tool that will generate leads for you in the future.
And Jonielle, you shared some great information the other day about how you used to be a mortgage broker and you worked with this clientele, low to moderate income, you know, they weren't buying $1 million homes, but you still get calls 20 years later from them and their family members wanting you to help them, right?
Yeah. Oh, yeah. I have the same cell phone as I did when I was an originator, and I haven't originated a loan in 10 years, and I get a call once a month, once every couple of months from home buyers I used to work with, because ultimately I was working with home buyers who didn't believe they even had the opportunity for that dream of home ownership. And when you take someone like that, you have customers for life. So,
Yep.
you know, you're building a business. And John and I were talking about it earlier about the number of originators who are going to go away this year because the refi business is gone. When had they focused on working with, you know, long-term bread and butter purchase business, they would stick around. So
Yeah.
it's a feel good feeling too. You know, you're building a business, you're having fun, and you're making money, but you're helping people. And that's just the amazing part for me, is you're truly doing good.
So we're going to talk real quick, like, how does somebody qualify? We do want y'all, and John will touch on this, but we do have a module that we require for you to take to get certified, if you will, to offer our products. And John will require that of you, and it will allow you to download a certificate of completion to show that you've completed that. So it will definitely go into more detail as far as eligibility and how to qualify someone, how to structure your file, etc. So module 1 and module 2 are the ones that I would recommend that you all take. Module 2 is more about how to process the file, etc. But just as a high level, we do have an eligibility quiz on our website under the home buyers and renters tab. And it's a 4-question quiz. And it's not going to ask for anything personal. We don't ask for contact information or anything personally. It just asks, you know, where are you buying? What's your profession? How much do you make? That kind of thing. And then it will tell them whether or not they're eligible for our down payment assistance, our mortgage credit certificate program, or both. And it does have a little video that explains and hopefully helps them kind of feel more comfortable about the process and how they're going to be working directly with you to apply for our assistance, and that you will be their main point of contact. And then John will be, you know, your main point of contact to broker the loan. Okay, so lenders, you have your own tab on the website. And so this is where you can see today's interest rates. So if you wanted to see what products we have available, this is where you would go. And we do send out an interest rate update every day that we make a change. I would highly encourage you to pay attention to those, especially today. And, you know, like we were saying, in the volatility of the market, to see what we have available that day. And like Jonielle mentioned before we even got on this training, if you see a product and it's available today, you better lock it in with John, or at least try to. And he'll talk to you about when they can lock it for you, and when's the soonest they could lock it. Hopefully this volatility will go away and you guys won't have to worry so much about that. But in the meantime, you know, keep your eyes out. Marketing resources, real quick. What can we offer you? We have these 3 options. These are pre-printed brochures that you can order from us at any time, and we will send them to you for free. There are spots on the back of these for your business card, and obviously pictures geared toward different audiences depending on who you're going to go speak with. We have lots of flyer options for you to choose from, tons of different images, tons of different language, and these are all downloadable and co-brandable at the bottom. So you can input your information. There are some that allow you to offer or to put your headshot or your company's logo in there as well. The 10 steps to buying a home checklist. This is great for first-time buyers to go through what they're going to expect throughout the process. It's double-sided, so it's English on one side, Spanish on the other. You can order these from us for free. We'll send them to you, or you can download them and co-brand these as well at the bottom. Okay, a few more things, and then we're going to hand the reins over to John, and then we'll do some Q&A. So I would be remiss if I didn't mention the Train the Trainer program. This is something that Jonielle and I worked on right when she first started 6 years ago, we realized, okay, there's 2 of us at the time, and now we have Frank, thank goodness. But there's 3 of us total for the entire state of Texas to market this program. We need help. We need you, and we need loan officers, and we need everybody possible to help us spread the word. So we created this Train the Trainer program. It's about an hour-long webinar. It's going to teach you how to teach others about this. It will also give you access to a secret page on our website where you will get PowerPoint presentations that have scripts included. So scripts on each slide. They're geared toward different audiences. One is geared toward Texas Heroes. One is geared toward the general home buying population. One is in Spanish. One is geared toward other real estate professionals if you wanted to do a presentation to a group of realtors. Lots of resources out there to help you build a business for yourself, like we've been saying, using these products and using your relationship with Mortgage Financial Services now. Where to hand out those flyers: fire stations, police departments, public schools, all those places where those Texas Heroes professions work. And John mentioned a good title for a blog or a newsletter, but another one would be, can I buy a house without a down payment? Or where can I get some free money to help me with my down payment when buying a home? We do a blog every Friday, and we almost always tie it back to our home buying programs, to our down payment assistance and mortgage credit certificates. So if you don't want to come up with the material on your own, you could share ours. We'd love for that to happen. So go follow us on Facebook and share our blogs, and hopefully you'll get some response from that information. Referral partners. You want to do a first-time homebuyer workshop? Team up with John and his team, or team up with homeowners insurance agents or other realtors. Anybody trying to get in front of the same audience you are, and you can share the logistics. You can share the cost of doing something like that, or you could even do it virtually and make it free and easy for everybody. Use that target audience the Hero program provides you. I mentioned that too. And then also a couple of cute ideas that we had from somebody that used to work for us. She was a salesperson with a builder, and she was also a teacher prior to that. And she said that they would get a lot of people sponsor lunches for the teachers and just, talk for about 5 minutes and leave their information behind. But that would be a great way to get in the door with the group of teachers. They're always looking for free lunch, but also don't take up a ton of their time because they do need a break. But you could leave things behind with your information on it, like some of those flyers that I showed you. And then the coffee and bar takeover, I don't know if I would do it in a bar setting maybe, but like at a coffee shop, she would go up to the cashier and she would say, I have $100 and I'd like to pay for the next $100 worth of coffee. And then she'd go over and set up a table, and the cashier would say, oh, so-and-so over there covered your coffee for today, if you want to go say thank you. And then she would have her little elevator pitch ready and a little flyer to hand to them. And I just thought that was a really cute idea. So I think that's about it. If you have questions for TSAHC, please reach out to us. We have a homeownership hotline. You can call that at any time and you'll get one of our team members. You'll get either Frank, like I said, probably Frank, or myself or Janielle. We all try to help each other out by answering the phones. And one of the most things that, most frequent things we hear is that our customer service is rock star. And we do call people back. We do respond to emails very quickly. And we do answer the phone. So if you need us, we're here for you. John, I will pass you over the reins.
Well, you guys are rock stars. I just need to throw that one out there for sure. So I've got a question for you. How many of these loans did you guys do last year?
Nearly 23,000.
23,000. Okay. And so how many of those 23,000 loans were actually originated by brokers last year?
If
None,
any,
because we didn't have brokers.
yeah, if any.
Right. Okay. Right. So that's kind of where I was going. I was throwing out the softball there.
It was a trick question.
So that's that's the really fun and exciting part for me right now. And again, I'm John with Mortgage Financial Services. We've got a great team of folks that run our wholesale division, and we are here to serve the broker community. So there's a giant pie out there that brokers have not had access to. And so we're super excited to partner with TSAHC and bring these programs out there to you guys. It's going to be tremendous. It's going to help you open doors. It's going to help you serve more families. And just like Danielle said, she's got people customers for life calling her 10 years later, asking her about, getting a house. So with that too, I just want to ask you guys real quick. So if I'm a broker, how do I get on the website?
Good question, John. So we update our website every quarter. And we require that you have done at least 4 loans with us in the last 12 months in order to be added to the website. Essentially, we will reach out to you and ask if you'd like to create a profile to advertise yourself as a participating lender on the website. And you can get free homebuyer referrals from that. And so basically, we run production reports every quarter, Danielle does, and then we look to see, okay, who's done at least 4 loans with us, and then that's who we reach out to say, hey, would you like to list yourself on our website?
No, that's super exciting. So my team and I are making it a personal mission to load that page up with the mortgage broker community. So I need you guys to help us get out there and do that and push some of the retail guys out of the way so we can get more of y'all in there. So, and at the end of the day, the real mission is putting families into homes. There's no question home ownership is the key to long-term generational wealth creation for many, many families out there in this country. So, but with that, so one of the questions that I get a lot is, well, I know what my lender paid comp is set with you as a wholesaler. How do I make money on these products? And there's a couple of things. One, when you're doing the actual assistance program, the down payment assistance, then it has to be done as a borrower paid compensation loan. And with that, you guys are allowed to charge up to 1.5 in origination, and plus charge a normal and customary processing fee for whether to cover your internal processing or your third-party processing firm that you're using. So yeah, that may be a little bit less than what your lender paid comp is, but at the same time, I go back into it's a little bit less of something rather than a lot of nothing, A, and then B, again, the goal is there. You're the hero. You put that family into a house. You now got the opportunity and the right, mind you, to ask them for referrals from every friend and family in their sphere of influence that they know. And then at the same time, you got to remember that realtors are out there. They're hungry too, right? There's not as many homes for sale. So if a borrower comes asking them, because a lot of times the realtor has the borrower before you do, and says, hey, well, we're looking for down payment assistance. If that realtor just assumes that because you're a broker, you don't have access to the program, well, they're just going to send it to a retail office down the street. So again, you're going to be there to protect your existing referral partners database, and then be able to go and expand it and generate new referral partnerships. So yeah, so you make a little bit less per loan, but again, you're going to have the opportunity to do more loans. Another one of the questions that I get a lot is, well, how does it work? Man, I've heard horror stories that, man, there's a lot of paperwork involved and they're hard to do and everything else. And I'll tell you that my team and I really kind of take the philosophy of, you catch them, we'll clean them and fry them. And so with that, there's going to be a little bit of work up front. You do have to take the training class, the module 1, at least module 1, of course, recommended module 1 and 2. And we do have a bond review process. So when we rolled this program out, man, we started to get inundated, which is amazing, but it started creating a bottleneck, right? So what we've done is we've put into our website at mfstpo.com. Now you'll see this little link here that says MFS Bond Review Express. Cool. And you're going to click on that, and you're going to enter in some information. You're going to put in your name, your email, your phone number, what type of loan program you're trying to do. Are you looking for conventional, FHA, VA, USDA? And you're going to drag and drop just a few simple documents in here. Your 1003, your findings, the credit report, fee sheet, your pay stubs, W-2s, and if you're doing the MCC, then 3 years worth of tax returns so we can verify that they meet the definition there of a first-time buyer. And so what we're doing this is kind of a pre-qualification, if you will. So that way we can know, all right, awesome, this program is ready to go. And now you're ready for underwriting. Then we're going to walk you through the actual submitting process into our portal. What was happening before was loan was coming in and it didn't meet this program, and then it was having to be restructured, and it just created a lot of confusion. So this way we're going to help you have the loan structured before you actually submit it into underwriting. So, and then there's one other little form, which is our special program submission form, which is a fillable PDF. And again, you're going to go in here and I'm going to select TSAHC grant. I'm going to put in there what my county income limit, what my income limit is, and then save it and you're done. So it's one simple little extra step. And, you know, if you've got questions on that, then you could reach out to myself or you could reach out to your account exec, whether it's Brad Parlin or Amber Ruda or anyone else on our team. And we've got an email that's right here. That is tpobond@mfsus.com, and we will answer your questions. Again, the mission here is to serve more families, create more loans, create more opportunities for future loans. So very short,
So
sweet.
there's a couple of questions that, if you don't mind, John, I'll hop in.
Yeah,
and
no,
ask.
please.
I was going to say there's a lot of questions in the chat. I've been waiting.
Oh, okay.
But go
Great.
ahead, Sarah. I can answer some of those probably too.
Okay, the one that I saw right off the bat was how much can we charge for a processing fee? So maybe that's a
Yeah,
combination.
Yes, no, yeah, James, great question. And we don't really have a dollar figure, but we call normal and customary. And, you know, I'd say that, I mean, normal and customary processing fee I see these days is, you know, $8, $9, even $1,000. I mean, it's if you're trying to charge $3,000 for processing, that's probably going to be excessive. So it's you know, normal and customary. What do you normally charge for processing? You know, it's not really there to gain extra revenue per se. You're there to actually cover your cost and what you charge.
Let's see here. What was the other one that you were looking at, Danielle?
Do you allow for TBD approvals? And what I would say is you cannot make a reservation TBD. You do have to have a purchase contract to lock it with TSAHC, but John can answer whether or not they will
Yes.
use TBD.
Yes, no. And that's a great question. And I'll throw this one out there. Yes, we will do a TBD underwrite on these programs. Or any loan program for that matter. And if you're an originator out there today, again, I would implore you to do all of your loans as TBDs, because for your buyer's perspective, that way, you know, there's no questions. Once they find a property, you're able to get a contract done and boom, you know, the loan's already approved. You're good to go there too. Two, man, once that buyer gives you all of their bank statements, tax returns, the letters of explanation for the late payment on the whatever card, or you know, all the ins and outs of these people's lives, once they've given all that to you, there is a psychology that they are less likely to go and leave you and have to give all that information to someone else. So I definitely recommend, and we do promote doing the, and we do promote doing TBD approvals. One other thing, going back to the compensation, I just want to make sure that we cover this too. So if you're using the assistance program, you are limited to that $150 plus plus the normal and customary processing. If you're doing just an MCC with any other product, then it's just a standard loan. So it's your standard compensation, whether you're doing borrower or lender paid. That the MCC is a separate certificate and it can be used with DPA, but doesn't have to be used with DPA. So I just want to make sure that everyone knows on that.
Yeah, so that shouldn't impact compensation in any way.
Correct. It's just a regular loan.
I did see another question. what if you'd completed module 1 training several years ago, maybe with another lender? We suggest that if you haven't completed it in the last year, that you do it again. Just because, our guidelines and programs change over time, and we want you to be equipped with the most recent and up-to-date knowledge as possible.
I'll just
Patrick, I remember you. I've done a training for you.
I will just tack on. So even when I did my certificate, my training class there, I really, really appreciate how you guys put it together, because it's broken up into it's one module broken into several different short YouTube videos. So it's very easy for a salesperson that's ADD like me to be able to follow it and get it done. It is not online defensive driving. I'll put it that way.
Right.
Thank you.
Yeah, we
Sarah
wanted
did
it
all
that way so that when you did log back in the future, if you were just looking for one specific refresher, you could click on that particular unit and watch it for a minute and be like, okay, yeah, that's what I thought, and then log back out. And versus having to watch the entire training again.
Yeah.
Right.
Sarah did all the work on putting that together. I do see a question for you, John, that you might be able to help with.
Yep.
It says, if the processing fee is from an actual third-party contract processor with an invoice from the third-party contract processor, is that processing fee allowed?
Yes. It's a third party that's going to a third party. So that is allowed.
And then we had a question about the presentation, Ashley, and for everyone else on the call that might be wondering, we will definitely send out the recording of today's training. I don't think we'll send out the slide deck necessarily. Those things tend to be shared, and then somehow if we make a change, then it's quickly outdated, and then that same information is still getting circulated. So, we'll send out the recording. And that's, I guess that's not much different, but.
Yeah.
Can I make a real quick comment on John's comment about his ADD? Do you see how many tabs he has open?
Hey, and that is just one window.
You have incognito windows open too, right?
Yes, I do. Several.
And then I think we have someone with their hand up. Would you like to go ahead and?
Yep. Oh, that's good. Guido there.
Yeah, on the MCC fee, I think you said it was $500. Is that a one-time, or is that,
Yes.
is there also a per annum fee?
Knowing
One time upfront fee, and that's it.
which obviously pays for itself, right?
Yeah, easy. Thank you.
Yeah. Now, and then I'm just, the last thing that I'll close, let you guys close this out here is with the help of our friends at TSAHC. I'm actually getting certified as a TREC instructor to be able to offer CE. And one of the things that I'd like to do to put out there to you guys is, we get it on the calendar. If you get a big group of realtors together, I'd be more than happy to come out and offer a CE class for your realtors on this to help you generate more business. And of course, talk you up as the ultimate expert. I'm just there as the trainer to deliver the CE. Because you got to be out there in today's environment now more than ever to have as many meaningful conversations as you can with folks, whether they're agents, whether they're buyers, whether they're builders. But doing a CE credit class for people, that's a great way to meet agents and protect your own existing ones and do more.
I would like to add to that, if you schedule that CE class at least a month in advance, and send us the date and time and location and a link for registration to that, TSAHC will help you advertise that class. And we have done a survey on all of our previous classes asking realtors how they heard about our class, and 70% of them say from TSAHC's website or social media. So, meaning
Awesome.
We can maybe bring 70% of those realtors to your scheduled class.
Awesome.
So we do have some that we should probably address before we wrap it up. But the $500 MCC fee would be disclosed on the loan estimate and on the closing disclosure. So yes, it's not paid to us before closing. It's all taken care of at closing. And you don't have to complete all 4 modules. So I would just recommend the first and the second. The second is really more geared toward, you know, what will be happening on the back end. So John, correct me if I'm wrong, when they get a file, they're going to be, you know, structuring the file, and then they're going to send it to you, and John and the MFS team are going to be the ones that submit to TSAHC.
Yes, correct. We're handling all the paperwork and communication. We're issuing the disclosures. We do the locking. You don't have to worry about it. I want you to go find the next loan. You catch them, we'll clean them and fry them.
And then, do you allow for MCC reissues if a client refinances? Yes. And Lena, for that, you would want to contact us and we can send you the application that borrower would need to complete. And it's really outside of the loan reissue or refinance process altogether. It's just a separate application that they submit directly to TSAHC, and then we reissue the certificate directly to them.
After refinancing.
After it's all completed. Yeah, Patrick, I hope to see you and John partnering together. He used to have us out all the time to his classes for realtors. So love to see that partnership.
100%.
Wade wants to know if you're in
It's
the
great to do it.
DFW. I'm sorry, Patrick, go ahead.
I'm sorry, I started to interrupt, but I was like, it was great to have you out there, built great relationships with some realtors. So I'm looking forward to doing it again. And John, if you can get it certified by tomorrow, I'll get something scheduled next week. Okay,
Awesome.
well, maybe a little time to promote.
Awesome.
Yeah. Somebody wants to know if you're in the DFW area, John.
Every once in a while. Yes, no. So you can find me at bookjohnnow.com and then schedule a call or an appointment with me. Or you can call our main office, 817-601-9010, and they'll definitely track me down.
But your home base is San Antonio. Right?
My home base is San Antonio, but I swear sometimes my little girl thinks I work for Southwest Airlines.
Oh. How old is your little girl? I didn't realize you had.
She 8 going on 19.
Yep. I had daughters. I know all about it.
Yes. Well, thank you all so much for hosting us, Sarah, Janelle, and thank you all, mortgage broker partners, for hopping on here today. This has been great, and again, we're excited and blessed and very grateful to be your partners on this venture. And let's go out there and let's crush 2022 and 2023. This is a great opportunity for everybody involved.
Yes, thank you so much, John, for being here with us today. And thank you all to all the brokers. I hope you're excited and we're here to help you. So don't hesitate to reach out. Thank you, Victor, for joining us today too.
Bye, everyone.
Everybody have a
Adios.
great day. Adios.